All right, welcome back, financial detectives. We're diving right back into our investigation of the accounting cycle. Today, we're going to focus on those super important middle steps that take a bunch of raw data and turn it into a crystal clear financial story. Let's get into it. Okay, so we've got this messy pile of transactions, right? All our clues are there. Every single sale, every purchase. But how in the world do you turn that into a perfect financial picture that tells the whole story with no missing pieces? So, in our last explainer, we knocked out the first 3 steps: identifying, recording, and then posting our transactions. If you missed that, don't sweat it. The link is right down in the description below. Now we get to the real detective work.
All right, step 4. This is our first big checkpoint. We're going to line up all our accounts and just see if they balance. This very important step is called the unadjusted trial balance.
Seriously, I want you to picture a seesaw. On one side, you've got all your debits. On the other, all your credits. And the goal is simple. Debits must equal credits. For this whole thing to work, that seesaw has to be perfectly level.
And this is where it gets really interesting when they don't match. Take a look at our example company, Printing Plus. The debits and credits just aren't adding up. Our seesaw is totally tilted. Uh-oh, looks like we've got a mystery to solve.
But hey, don't worry, there's a really cool trick for finding the culprit. First, you find the difference between the 2 totals. In this case, it's $200. Step 2, you just divide that number by 2. So 200 divided by 2 is 100. That is the number we're hunting for. Somewhere, there's a $100 transaction in the wrong column.
And found it. You see that? The $100 for dividends was accidentally put in the credit column. It's supposed to be a debit. As soon as we move it, bam, the columns balance. Case closed. This is a perfect example of why the trial balance is such an awesome first checkpoint.
So, our seesaw is level. That's great. But are we done? Nope, not quite. Now we have to deal with the unseen transactions. You know, all the stuff that happened between the lines during the month.
This next step is all about making what we call adjusting entries. A good way to think about it is like updating your diary at the end of the month. You add in all the little things you experienced but forgot to write down day by day. It's the exact same idea in accounting. We have to record revenues and expenses that have happened but just haven't been officially recorded yet.
And basically, these adjustments fall into 2 main categories. First, you've got accruals. This is for stuff that's already happened, but maybe the cash hasn't moved yet. And then you've got deferrals. This is when cash has moved, but the service or the expense hasn't been fully used up yet. And here's the big takeaway, right? Under accrual accounting, we record things when they happen, not necessarily when we get paid. It is all about matching the business activity to the right time period, and this is absolutely crucial for getting a true, honest picture of how the business is doing. Okay, let's check back in with Printing Plus. So during the month, they used up $100 worth of office supplies. Their employees also earned $1,500 in salary that hasn't actually been paid out yet, and they finished $600 worth of work for a customer who had paid them in advance. All of these things need an adjustment.
We're about to see how these adjustments really fix our financial picture. If you like this video, then please subscribe and hit the thumbs up below. Okay, on to step 6, the final rehearsal. After making all of those little adjustments, we're going to run one more trial balance. You can think of it as the final check to make sure everything is absolutely perfect before the main event.
And here it is, the adjusted trial balance for Printing Plus. It is perfectly balanced and totally ready for the show. You'll probably notice some new accounts popped up, like supplies expense, and the balances for some other accounts have changed as well.
So what really changed? Well, before, it looked like the company had $500 in supplies, but the adjusted, more accurate number, $400. And look at salaries expense. It went from $3,600 all the way up to $5,100. See? Our financial picture is getting way more accurate.
So, why do we go through all this trouble? Why do these steps matter so much? Well, for one, they make sure our records are mathematically correct. But even more important, they capture the complete financial story, not just a list of cash transactions. They create an accurate, reliable foundation for the official financial statements.
Our numbers are now perfect. So what's the big show they're getting ready for? Well, we've balanced, adjusted, and polished our data until it shines. In our next explainer, we'll see how this perfect adjusted trial balance is used to create the final product, the main financial statements. Thanks for watching. Hope to see you in the next video.